Welcome to The Explainer, where today we're tackling a really wild financial claim, the idea that JPMorgan Chase, long seen as the big bad wolf of the silver market, has pulled off a massive flip, betting billions that its price is about to soar.
So the whole story kicks off with this staggering number from the source material: 750 million ounces of physical silver. To give you an idea of how huge that is, it's almost a full year's worth of every ounce of silver mined on the entire planet, all supposedly scooped up by one bank.
So this is the big question, right? The central mystery we're going to dig into today. Based on what the source is claiming, for years, maybe decades, JPMorgan was seen as the main reason silver prices stayed down. So why on earth, according to this report, would they do a complete 180?
Let's get into the main claim here. The idea is that JPMorgan didn't just tweak their portfolio a little bit. Nope. They've apparently made this colossal, multi-billion-dollar bet that the party's over for cheap silver.
So how did they supposedly pull this off? Well, according to the source, it was a two-step move. First, they allegedly got rid of their massive 200 million ounce paper short position. That was their bet that prices would fall. Then, they supposedly went on the attack, dropping an estimated $22 billion to buy up a giant hoard of the real physical metal.
And just look at the contrast this slide lays out. It's really night and day. On one side, you've got the bank that paid almost $1 billion fine for manipulation, the one known for squashing any price rallies. But on the other side, the source paints a picture of a totally new JPMorgan, the world's biggest physical holder, sitting on 750 million ounces, ready to cash in on the very price explosion it used to prevent. Now, a pivot this massive doesn't just happen out of the blue, right? There has to be a pretty big reason. And the source argues this wasn't some random trade. It was a calculated move in response to what it calls the 3 dominoes of scarcity, which it says are already tipping over. And these 3 things, they're the absolute foundation for this whole argument. The claim is simple. The real metal is disappearing. The paper market that pretends to represent it is incredibly unstable, and the demand from industries that actually need silver is just relentless.
So that first domino, the physical scarcity, is captured perfectly in this quote from the source. It paints a really stressful picture. I mean, when banks are reportedly paying annualized rates as high as 35% just to borrow physical metal, that screams there's a serious shortage of the actual bars.
All right, domino number 2, the paper market, specifically on the COMEX exchange. And what this chart is showing you is just how crazy leveraged it is. According to the source, for every 1 ounce of real physical silver sitting in a vault, there are apparently 2.44 paper claims all fighting for it. That's a lot of promises for not a lot of metal. And that brings us to the third and final domino: unstoppable industrial demand. The source is saying that in 2025, industries just ate up a massive 1.2 billion ounces for all the tech we love: solar panels, electric vehicles, 5G. The thing is, unlike someone buying a coin, this demand from manufacturers is non-negotiable. They have to have it, which locks in huge demand for years to come. Hey, by the way, if you're enjoying this breakdown, do us a favor and hit those like, share, and subscribe buttons. It really helps us out, and you won't miss what's coming next.
So the source is saying that JPMorgan saw all these dominoes lining up, and it wasn't by chance. They argued this whole thing was the climax of a strategy they've been cooking up for more than 10 years, a real predator's long game.
I mean, just take a look at the timeline the source puts together here. It really paints a picture of a slow, deliberate plan. It starts way back in 2011 when they build their own vault. By 2017, they reportedly control over half the silver in the entire COMEX system. Then in 2020, they pay that massive fine, maybe just the cost of doing business, before making their alleged final move in 2025. It's like they were methodically capturing the entire market's choke point, piece by piece. Okay, but some of you might be thinking about the Hunt brothers back in 1980, right? Well, the source makes a really critical distinction here. As you can see, the Hunts were all about leverage and paper contracts, bets that regulators could and did break by just changing the rules. The big difference, the source claims, is that JPMorgan is using its own cash to buy the actual physical metal. You can't get a margin call on a silver bar that's sitting in your own vault.
So what happens when you mix insane physical scarcity, a shaky paper market, and one giant predator allegedly cornering the supply? You get what the source is calling the mathematical endgame. The argument is pretty simple. At this point, a huge price revaluation isn't just a possibility, it's a mathematical certainty.
And the heart of that argument is this massive structural deficit. The source, pointing to data from the Silver Institute, says industrial demand alone is swallowing up way more silver than all the mines in the world can dig up. And check this out. This isn't a new thing. It's supposedly the 6th year in a row this has happened.
And that leads right to the biggest vulnerability of all, the alleged insolvency of the paper market. Think about it. With so little real metal backing up all those paper promises, the source has run the numbers. They claim that if just 41% of the people holding contracts ask for their physical silver, the whole thing could collapse. The exchange just couldn't deliver.
Okay, so what does this all mean for the price? The source lays out a few potential scenarios. First up, the conservative target. They say just to balance out the current supply and demand problem, silver would have to be around $150 an ounce. From there, we get to the next level, $300 an ounce. This would happen if the COMEX really started to crack under the pressure, failing to deliver the metal and being forced to pay people off in cash at a huge premium just because the silver isn't there. And then there's the big one. The most extreme target they talk about is over $600. Now, this is the scenario where the paper market doesn't just bend, it breaks completely, and the price of real, physical silver is finally set free to find its true value.
And that's where the source leaves us, with this one provocative question. The entire claim is that the market's biggest predator has now switched teams. So is their massive $22 billion bet the ultimate signal? Is it the final warning shot that a historic revaluation of silver is not just possible, but is already underway?